Hey everyone, happy Thursday, June 27th. It's 10 a.m. on the West Coast, and it's time for another market update. The markets are looking towards tomorrow's big PCE inflation report as far as something that's going to drive mortgage rates and things like that. But we did get a lot of home sales data this week and appreciation data, so let's take a look. First thing, going back to last Friday, we got May's existing home sales. These are homes that, basically closed in the month of May. So they were, shopping for houses probably in the months of March and April when rates were a little bit higher. Those came a little lower than expected at negative 0.7% month over month, negative 2.8% year over year. Taking a closer look, median home price jumped to $419,300, up 3% month over month. Again, and now 6% year over year. Keep in mind, median is the mix of homes sold, so more than likely more expensive homes sold to bring that up a little bit. Inventory did jump 6.7% month over month, and now is up almost 19% year over year. But we're still at only about 3.7 months supply. In a normal market, is considered about 4.6 months. So definitely getting way better than it has been over the last couple of years, but still below what a normal market would be. And then one thing that did drop was, days on market. So after you list your home, how quickly it's sold or goes pending. It started at 33 in March. In April, dropped to 26, which is a big drop, and then dropped again in May to 24 days on market. So looks like that's a good thing for home sellers. If things are, in certain areas, at least when you put your home in the market, it's selling quicker. Sold over list price, another good thing for sellers, that jumped from 27% to 30%. So, the home sold over what it was originally listed at. First-time home buyers dropped, cash buyers and investors stayed the same. So overall, though, a pretty good report considering when people were shopping for these homes that, closed in May. Next thing we got was new home sales for May, and that came in big low number, negative 11.3%, but there was a big upward revision to April where they changed it from 634,000, I believe, to 698,000 sold. So that, made that number, if it was the original number reported, I think it would only be down about 2.4%. Again, but they're not good for new home sales. This has to do with obviously rates being higher, different things, builder costs being a little bit higher, maybe not as much inventory out there. So for sale total inventory actually jumped a little bit from April to May, 7,000, not a big jump. Monthly sales pace dropped from 58 to 52,000 units. And so that's the report. So that made the reported month supply jump in April from 9.1 months worth of supply to 9.3 months supply. Keep in mind, there's only about 99,000 of those homes are completed. So if you or I wanted to go buy one of these homes, most of these are, could just be a bare lot, kind of deal. So, the actual month supply is only about 1.92, so just a little under 2 months. But overall, not a good, sign for home builders that they're down, 16.5% year over year. Next thing we got was May pending home sales. That came out today. And again, came in lower than expectation. Expectations were plus 2.5%, came in at negative 2.1%. Now we're down negative 6.6% year over year. And, like Barry says right here, pending home sales, this is on existing homes, declined slightly in May. Inventory did jump up, which we'll look at in a second, but higher rates are still weighing on buyers, which, makes sense. I see that every day. And then taking a closer look at the inventory, because you might have seen people making a big deal about inventory jumped. So inventory is up to 788,000, according to what, the active listing count in the United States. But this happens every May. It's the listing season. So you can go back, normal market pre-pandemic, we were about, 1.2 million, usually available homes in the month of May. It's jumped, this year we're at 788. It's definitely jumped from 2022 and 2023. But these were really, really, really abnormally low numbers because of the pandemic and everything that happened after that, and, rates and people not wanting to list their homes. So still 788, about 400,000 below what the average was, pre-pandemic. So this happens every year. Seasonal inventory comes about. People list their homes in the spring. They want to get settled before, school starts, things like that. So just, block out that other noise about, oh my goodness, there's so much inventory out there, because it's actually lower than normal. April Case Shiller came in plus 0.3% month over month. That's the gold standard in appreciation. FHFA, which does not count cash deals or jumbo, came in at plus 0.2%. Taking a closer look at the Case Shiller. Now at year over year, it's at 6.3%. It's at all-time high. It's good thing for homeowners. Not good for people that have been waiting for home prices to drop. And again, this is April, so we're a little, they're a little bit, they lag a little bit behind the rest of the stuff, considering we're at the end of June now. But again, for the doomsayers and the naysayers that thought that home prices were just going to crater a couple years ago, they just keep going up and up and up. So again, good for home buyers, or I'm sorry, homeowners, but not good for people that are looking for prices to drop out of nowhere. Next thing we got was initial jobless claims. This came in a little bit lower than expectations, but still higher than it had been, over the last year or so. Came in at 233,000 new claims. Continuing claims, so basically people that have been on unemployment for a while now, that continues to jump up. I think it's the highest since November 2021. So something to keep an eye on. It seems like the Fed's paying closer attention to that kind of stuff right now. So we'll talk about that now. Miscellaneous stuff. So first thing, GDP, the final reading for Q1 came in at 1.4%, what the market expected. Overall, considering all the spending our government's doing, still a pretty, low number. Can you imagine if we weren't spending a lot of stuff, emergency spending, where that number would be? Fed speakers, that's, a mixed bunch. There's been some that are coming out and saying they support, maybe we need to do new hikes if inflation gets sticky, but we've had a lot this week come out and basically acknowledge that inflation, it's not there's not a good chance for it to come down maybe anytime soon, but they got to be really careful about the job market, setting in a recession, unemployment rate, stuff like that. So that's all stuff we're happy that they're seeing at this point. But really the main negative that we've got over the last couple of days, there's been global inflation numbers. So the Bank of Canada, I believe yesterday, and or maybe the day before, and the Bank of Australia, both came out with hotter than expectation inflation numbers. And since we're in a global economy, our bond markets didn't like that. That caused rates to tick up a little bit. So where does that leave us? Just a little bit up. Last week it was about 7.02 was the average conventional for people, really, really good borrowers according to this lender survey. Now up 7.05 to 7.05. So hanging around that 7 number like we have been. And then upcoming dates, important dates. Like I told you guys, tomorrow is the big PCE inflation data. That's the Fed's favorite form of inflation to take a look at, especially that core number. We're expecting to come in slightly favorable, but those, that Bank of Canada number and that Australian number kind of scared the markets a little bit. Like maybe the American number will come in a little higher than expected too. So we'll have to take a close look at that. Otherwise, markets, it's good to see for homeowners, everything staying, appreciation staying strong for them. Obviously, transactions have gone down with, less people listing their homes, and, rates are obviously a huge part of that deal. So, if anybody needs anything at all, please don't hesitate to reach out. Otherwise, I hope you guys have a great week, and we'll talk soon. Thanks, guys. And let's fingers crossed for that inflation number tomorrow.